Hi, Jonathan York from Bay Financial Partners, looking at the investment markets. The US market's still holding a pretty reasonable bid after the recent round of earnings releases. On the whole, they were certainly better than expected, and also the guidance was reasonable as well going forward. Now, really, attention is now shifting to the sort of stimulus package that's going to be passed through Congress from the Biden administration. Just a little bit of sort of final negotiations on the size of that, who's going to get it, etc. But it will be a substantial package. So with that, and further sort of evidence from the Fed that they are looking to keep rates on hold and really trying to be as accommodative as possible. So you've got an administration that is now a lot more sort of user-friendly, certainly a lot less confrontational, a lot more transparent, and really trying to sort of help the US economy get through this sort of pandemic of COVID-19. So all of that points to a pretty reasonable environment for equities and shares, and certainly most sort of analysts are expecting a pretty reasonable year for US equities. But obviously, a lot of that really very dependent on the COVID-19 vaccine and getting that rolled out. Again, certainly the Biden administration appears to be a lot more sort of on the front foot and sort of pushing that forward, and also as well sort of introducing sort of restrictions on sort of movement, mandatory masks in federal buildings, etc. All of this is obviously trying to prevent the spread of the disease. Now, at present, the big sort of question mark is after the recent Super Bowl weekend. Certainly, lots of parties, lots of get-togethers to watch the the big sort of sporting event in the US, and there is certainly some worries that could be some of those could now be sort of super spreaders. Now, obviously, the other big story from the US is the start of the impeachment trial, the second impeachment trial for the ex-president Donald Trump, and that's just going to be very interesting to see how that sort of plays through. Because certainly most of the people who've been arrested for the insurrections and the sort of storming of the Capitol building have all pretty come up with the same story, that they thought they were acting on the instructions of the president and just doing what he wanted them to do. So now it's just going to be a question to see how many Republicans actually will vote in favor of the impeachment. Many obviously are sort of wary that they have to get re-elected themselves, and sort of worried about trying to sort of upset the party vote. Interesting, Bitcoin as well has had another recent sort of spurt. That's really on the back of Tesla and Elon Musk purchasing about $1.5 billion worth of the cryptocurrency Bitcoin. That's taking it up to around sort of 44,000 bucks. Now again, if you look at that over 12 months ago, it's probably trading around sort of $5,000. Obviously, on the back of renewed sort of optimism for global growth, oil is still trading pretty well. WTI is around 58 bucks a barrel. Brent has just crept over the 60. Now, Europe and the UK are still facing some pretty major restrictions in terms of movement, etc. Really just trying to crack down on the COVID-19 as sort of winter is sort of now in its last sort of month or so. But certainly the UK seems to be making some headway out there. Certainly the number of cases seems to be reducing. The increase in number of cases. Hospitalizations are still sort of rising a little bit, and certainly deaths are still rising as well. But that's sort of a lagging indicator from people who've already caught the disease. Whereas now with the rollout of the vaccines, and they've got over 9 million in the UK's vaccinated now, that appears to be making a little bit of headway. So that's certainly some positive news. The major issue is, the people out there who aren't sort of abiding by the restrictions, and also as well the people who are not going to get vaccinated. Interesting as well, the UK Bank of England is starting to talk about negative rates and sort of setting up a mechanism for banks to be able to cope with that. Now, it will be interesting to see if they go down that route, because certainly it doesn't appear to have worked in the rest of Europe. And so, really, why would the UK follow that? In Australia, they seem to be getting on top of the COVID virus. The sort of lockdown in Perth is sort of seemed to be having its effect there with that sort of one case, and the lack of community transmission out there. The border between Queensland and New South Wales has been reopened, and also looking at Victoria and New South Wales as well, border reopening. Obviously, that's all very positive for the Australian economy, and really sort of pushing on at a pretty reasonable rate. Helped as well by sort of increasing commodity prices. Closer to home here in New Zealand, still some issues with the managed isolation facilities. There is a further case potentially out there in the community that has left managed isolation, then tested positive. Still sort of issues on some of the sort of procedures that are taking place in these facilities. And the major one in Auckland, Pullman, has now been closed down as a managed isolation facility. So the government really scrambling to try and sort of cover themselves there. And, at the moment we seem to have dodged a bit of a bullet, because there's sort of 3 cases that have got out into the community, don't seem to have spread. And, the tests that are coming back are negative. Now, on the housing front, the Reserve Bank has reintroduced the LVR limitations, 30% now for investors, and 20% for new home buyers. Now, really too early to tell if that's really going to have any impact on the rising house prices. They're still being fueled by record low interest rates, so by limited supply and increased demand. But what is clear, there's certainly quite a few builds taking place as well, and potentially there was one of the major houses did some research on that, and with the lack of sort of migration coming back into New Zealand, potentially in sort of 12 to 18 months, we could have an oversupply case. Now, on the fixed interest front, Vida have a retail bond in the marketplace, 7 years. Rate hasn't been set yet, but the minimum rate will be 2.8%. Now, if you're interested in that, go to the website www.bayfinancialpartners.co.nz. Obviously in this low interest rate environment, it is pretty tough out there looking for income. Certainly fixed interest and term deposits are pretty low given the record low interest rates, but there are plenty of alternatives available in terms of dividend shares, etc. And if you're interested in discussing what is available, go to www.bayfinancialpartners.co.nz for lots of interesting articles, and we look forward to speaking to you soon.